For us at Edelweiss, it has been a good quarter. It's been positive, but I think the key word for this quarter and for this year, FY21 has been a very, very different year than the ones we have seen. I think the word has been the company has been resilient. There has been resilient performance across multiple businesses, and our diversified model has truly helped us in this year also as we have gone down. As you may have seen, our consolidated profit after tax for Q4 came at 637 crores, but ex insurance, because we still continue to invest in insurance, the profit after tax was 702 crores. The highlight has been the fee income. Fee income was 550 crore, which is the highest it has been even after COVID. So we have gone to higher than the pre-COVID. And as our liquidity and financial strength has improved, our board has recommended a final dividend of 55 paise per share. So for this year, we are back to a dividend paying status, with the total dividend for this year being 1.45 per share. As we had stated earlier, our focus on FY21 was consolidation, fortification, strengthening the balance sheet, and on that Q4 highlight achieved that for us. All our businesses are very well diversified and well capitalized, and they have all built good platforms and are now poised for growth. The key highlight has been our customer franchise. Our customer assets in this year, FY21, have grown 35%. So we have seen a 35% growth in customer assets to a total of 2,80,800 crores of all the customer assets in all our businesses put together. Our fee-based businesses, asset management, insurance have had their best year ever. Both our asset management business, the alternative asset management business and the mutual fund, has had a best year ever. And both our insurance businesses, the life insurance and general insurance business, have also grown very, very strongly, even as compared to the peers and the industry as a whole in this year. Our AMC now has a AUM of 55,000 crores, and it is now ranked number 15 in an AUM basis on industry. Our alternative asset management AUM is now 30,000 crore, and that makes us one of the largest alternative asset manager in the country. Our life insurance business grew 25% APE growth this year, and it was the only life insurance company to grow positively every month of FY21. And our general insurance business grew at 49%. On the wealth management side, we had strong growth, 36% growth, and the assets under advice have crossed 1.5 lakh crores. And finally, ARC also had strong recoveries. We are now building scale on ARC on the retail side. Important event in this quarter has been we have successfully concluded a stake sale in a wealth management business, where we built this business over the last 20 years, and over this time the valuation of that business is now 4,400 crores, and with a partnership with PAG we now hold 38.5%. We have a chance to go to up to 44% in this business, but I think this business is the start of the value unlocking. Our approach has been build value, and then after 10, 15, 20 years, as the value has got built over cycles and the platform has got solid, then unlock value. So that we can get some capital, plus we can reward our shareholders. So I think the Edelweiss Wealth Management transaction is now a very important event behind us. But ahead of us, now we are working towards a demerger and the eventual listing of this entity, where the Edelweiss shareholders can participate directly in this business. On the wholesale assets, we continue to bring down our wholesale asset. We remain committed to a asset light credit model as we go along, and our wholesale book is down by 35% from FY19. It will become half of what it is now by 23. We have focused on workouts. We have recovered quite a bit of money, and we are very, very confident that on the retail credit, the housing finance and the SME finance, our approach of being asset light and tech driven has started working well. We will see significant opportunity in that in the next couple of years. This year we have also strengthened our balance sheet and liquidity. Our total group net worth is now more than 8,500 crore. We have more than enough capital in all our businesses. The borrowings have come down, but equity has grown, and the debt to equity is now 2.5. This is about half of what it was at the peak. We were more than 5 times debt to equity at the peak. We are now 2.5 times. So there has been a significant improvement in all parameters on the balance sheet size. So all in year, the year was a strange year. Very started off with COVID hitting everybody in the world. But overall, I think we have performed as per our expectations, and we continue to strengthen the foundation. Going forward, I think in 22 we will continue to work towards the demerger and the listing of the Edelweiss Wealth Management business. Continue to focus on strengthening liquidity and balance sheet as we've been doing, and grow the retail credit, asset management, and insurance business. 22 is still going to be a year where we will continue to invest. It's going to be a year where we'll continue to build upon that. And we do think, given that COVID wave 2 is still there, I think the first half of this year will be a cautious one. And we see growth only after October or December in this year for the Indian economy. So along with that, we want to thank all our stakeholders, the banks and the regulators, and all our employees and customers for helping us get through that. And we hope that all of us stay safe and come out of this COVID wave stronger than we were earlier. Thank you.